Hey traders, massive apologies that my videos have fallen behind. As I said at the start of this series, I am terrible at this journaling stuff, but I'm back. Reason for the break was we were on a family holiday over in Athens, which was very nice. I had planned to upload my usual videos from there, but let's just say the Greek sun and sand got in the way. So anyway, this video will be a full recap since my last one. What's happened to my trades, new trades put on, trades closed. I've had a couple of assignments as well. So we're on the covered call side of the wheel at the moment with a couple. So we'll go through all of those. So my last video, I've just had a look back to remind myself. It was the week 41 trades that I put on, which was NU and Sentinel-1. So I will go through from that point onwards. So we'll start with PayPal. PayPal's been fun over the last few weeks. So back on the 7th of October for PayPal, it had a nice jump running up to earnings, towards earnings. And if you remember, with this one, I had the 70 strike protective put that I had bought at the time. And I had a covered call at 72 at the time, expiring on the 17th of October. So with the jump, the value of the protective put obviously dropped. I took the view that PayPal was coming back on its rally, coming back to the highs we saw in July, and perhaps was going to carry on up, maybe touch 80. So I sold the protective put. Wasn't a lot of value left in it. I think it was 47 cents for the one contract I got back. That was fine. And then I rolled the 42 strike covered call up and out to 75. The 75 strike. And if you remember with this one, I was assigned at 74. So here I was in my mind sitting pretty. I was going to get called away at $1 higher than my assignment price. I had to go out to October the 31st to get that rolled up, and that was a credit of 53 cents for the one contract. So I was quite happy with that. And then let's see what happened. Oh, PayPal dropped right back and lower over the coming weeks. So yeah, down here I was missing that protective put at 70 that I disposed of. But I still had the covered call up at 75, and it had a huge amount of time value left in it. So I didn't do anything with it. I just left PayPal. And it trundled along. We had a good earnings, which gave us a massive jump on earnings on the 28th of October, at which point my 75 strike was covered call was sitting pretty once again. I was quite happy with that. And then in the same day and the next couple of days, PayPal proceeded to give back everything that it had made on its earnings, and is currently trading just around my cost basis of $69.10. So on the 31st of October, was it a day before, on the 30th, yeah, there was no value left in my 75 covered call. So I opened a 70, so I bought that back for, I think it was around about 2 cents, I think it was. And I opened a 74 strike covered call, which is my assignment price, expiring on the 7th of November. So that's a weekly, which is how I like to keep my covered calls. And that was for 31 cents. So not bad in all. I'm quite happy to get out of this PayPal trade, but it seems to be like in the 70 level, so we'll just have to see what happens, and we will roll our covered calls along and up as we go. There is a dividend coming up. I don't think it's anything to write home about, 14 cents per share, so better than a kick in the face, but nothing to write home about. So that's where we are with PayPal at the moment. Next trade I want to talk about is Soxal. So if you will remember with Soxal, we were, to look a bit different than my last videos, we were quite in the money with this one with my covered calls at the time. Our covered calls were around about, I can't remember, what were they? 35, yes, my covered calls were at 35, and I had 2 puts at the 20 level that I had used to pay for those 35 strike covered calls. Cost basis was above where my covered calls were, and yeah, as we know, Soxal has been on an absolute tear with the rest of the semiconductor industry at the moment. So what have I done since the last videos? So this big red candle here. So on the 10th of October we had quite a drop. Soxal lost close on 10% in a day, was it? Something like that. I have 42. That's not right. This one. There we go. High of 42 down to a low of 34. Whoa, okay. Yeah, that's considerably more. So I took an opportunity when the price was below the covered calls I had at the time. Remember, the covered calls were 35. I managed to roll one covered call up to my first original assignment price. So that was 35 all the way up to 50. Now that cost me a debit of $2.53 for that contract. So that was quite a significant debit, but I got that all the way up to the 50 mark, which is where I was first assigned, all the way back in July 2024. And I rolled my second cover call from 35 up to 43, which was where I was assigned again all the way back in 2024, August I think that was. So, and what was that? That was also a debit. That was a debit of 93 cents to do that. So all in all, I'm down to the tune of $3.46 or something like that. So what I did is I rolled these 2 puts, kept the same strike, but rolled them out to January 2027. I originally had them for May 26, and I rolled them all the way out to January 27, and that was for a good credit of $2.11 per contract. That was 2 contracts, so overall it was a profitable trade, and it gets my covered calls up to my assignment prices. That's all very well and good. Those covered calls are out to May 26 next year, so that's a lot of time between now and then. So what could happen here? Well, Soxal could keep rising, which is what I want, and I will hold these until there is no time value left in those covered calls and close them out, and then hold the puts for another year and then close them out. That's the ideal situation. Soxal turns around. This could happen. This is a hugely volatile ETF. It's levered 3 times, so could turn around and plummet right back down. If it does that, then the covered calls will expire worthless, and we will be out of a situation where I have covered calls below my cost basis. We might have the underlying below my cost basis, but I won't have covered calls below my cost basis, and then I will revert to weekly covered calls around the 10 delta level, following whatever Soxal does. Of course, it could blow right back down through those two puts that I have at the $20 strike, and if that's the case, my plan will be to roll those out and down, although they're already pretty far out in time, or take assignment and be in an average down quite significantly for those. I'd have shares at 50, 43 and 20, so the average price would be much lower than where I am now. Yep, this trade hasn't gone how I wanted at all, and this is a case of just reacting to what happens when it happens to see if we can get out of this. Ideally, Soxal rises or kind of stays where it is. That's fine until May next year, but yeah, that's a long time. So, but we're in a better situation than we were. I'm bullish on the semiconductor industry for the next couple of years at least, or I wouldn't have rolled these out so far. So yeah, we'll hopefully see Soxal continuing to rise. It's been a long road from 50 where I was assigned all the way down to, what did we hit, 7 at one point, I think it was it? Low of 723, yeah, and then slowly all the way up. As I've said before, my mistake here was selling covered calls the same way I sell puts a month out. Leaves very little time to react. You quickly find yourself way out in the future, whereas I am convinced, and kind of PayPal's proved my point on this a little bit, weekly covered calls is the way to go. You can be a lot more flexible, a lot more dynamic, and react to quick movements in the underlying, especially when you're on a leveraged ETF like this one. So that is where we are with Soxal. UPST. So this one has, my thesis on this one didn't play out. Remember originally I had the 60 strike, which looked like a good level of support. It was broken around the end of September. It's continued to fall. I rolled it down to 56 for a 24th of October expiry. With earnings so close with this one, I could have rolled it out another month for a really good credit and kept the 56 strike just to see if it would recover. Thought about doing it, but I don't like to hold cash secure puts through earnings. It caps any potential upside. So on earnings, one of three things can happen. It pops big time, it drops like crazy, or it just trundles on, not very much happening. If I have a trade that's underwater below my strike price coming up to earnings, I would rather be assigned on the off chance that you get a good pop on earnings and a jump. In that case, you can quickly sell the shares for a profit, and if not, you just sell covered calls. With UPST, with earnings, what's that? It's next week, isn't it? Next Tuesday. I rolled it from the 24th of October to the 31st, and I did that on the 14th to give myself an extra bit of time to see if it would recover, and it so nearly did. On Monday the 27th, it looked like it was coming back up, and then we've had this drop with a little recovery on Friday. So I took assignment of this. Well, I was early assigned on Thursday, a day before, and I was going to leave it. I was just felt fine. That's kind of what I want. I was assigned. I was going to go through earnings. If you look back at previous earnings, it's very volatile. this was a good earnings, and it dropped a horrendous amount. Good earnings here, did very little. Good earnings here, massive jump. But when I was looking at the call prices on UPST, for a week out, because it's so volatile, the credits, the premiums were just insane. So I took a 57 strike call for $1.40 for one contract, which is insane when you think that's only 7 days. Almost 3% for 7-day trade. It's just crazy, and it's just because of the volatility that earnings brings. So if this does pop up $10, then yeah, I've capped my upside here, but I'll get out of the trade with an extra $100 above my assignment price. And if that doesn't happen, then I've lowered my cost basis by $1.40, which is nothing to sniff at. So we'll see what happens on UPST. My cost basis for UPST at the moment is $51.92. So we only need to get up to here to get out with a scratch trade. But yeah, that's not what I aim for. I want to keep my profit. Thank you very much. So that was UPST. NU. So you remember my last video, I jumped into the NU trade at the 14.5 level for a decent credit, and that one closed out on this jump up here. Hit my take profit of 50%, so I was more than happy with that. I was out of that on the 20th of October, and I got into that on the 7th. Was that 20th? Pretty sure it was the 20th. No, I was out of that before that candle. Yeah, this green candle, sorry, the 20th here. So that's decreased the price of my leap that I have on this one, which is down at 8. So I'm going to keep jumping into NU whenever I see a retracement, just chipping away at the cost of this leap. The best case scenario would be I get this free leap, and I'm still convinced that NU can hit 20 within the next 2 years. So happy with that trade. That went well. We will look for the next retracement on NU, because this 14 level has become 16 level, has become a good point of resistance. It is struggling to break through that. Look, we've got earnings coming up. 3.52 billion, 16 cents on the 13th. So we will see what. Yeah, it's potentially a tall order, but we'll see what NU does. If we get a drop on earnings, I will be straight back in with some more cash secured puts. Gap, my friend Gap. So Gap is a trade I opened. When was that? The 22nd. So I jumped into Gap on the 22nd of October, right here on this red candle at the 20.5 level down here. So if you look back, this is a good area of support here, resistance here, support here. It's kind of dotted around above that most of the time, but not really far below it. It's below the 200 day at the time. It was below all the other moving averages, and I just got lucky with this trade. As soon as the very next day, we had 3 good green days, and I was out of Gap with an 80% profit in 8 days, I think that was. Yeah, no less. 6 days. 6 days. Yep, so that was a good trade. In and out. Earnings coming up. We'll see what happens with Gap. I quite like this as one to trade. It's not too volatile, as long as you're not touching it near earnings, of course. Same with everything. NVO. So my thesis on this one really hasn't played out. I still believe in it. I still think it's undervalued, even more so now. Again, this is another one that I could have rolled before earnings out for another month for a decent credit. But same story as with UPST. I would rather take assignment and hope for a good jump on earnings. If not, going into next week, we will we'll be looking at weekly covered calls, see what we can do with those. So I was assigned this on Friday, just gone. It expired on the 31st. I wasn't early assigned. I was assigned, got the email from Tasty Trade over the weekend. So I'm the proud owner of 100 shares of NVO. Since my last video, the only thing I did was I rolled the trade that was originally going to expire on the 24th of October on the 22nd, which was back here. Oh no, miles away. 22nd, where are we? Here. Yeah, here. At this point, I was fairly confident that we'd had bounces here, we'd had a bounce here, kind of at the same level. I thought there was a good chance of a bounce back up 56 if I gave it another week, so I did that. Got nice credit for that, for 66 cents, but it went the other way. So now we are just waiting to see what happens with earnings on Wednesday next week. And fingers crossed we'll get a nice little bounce, or at least a turnaround like we did last earnings. It can peak back up. But if not, either way, I think we're probably going to end up selling covered calls on this one as well. And we'll see what happens. HIMS. So you remember I, in my last videos, was talking about HIMS. I had a good trade on, and that one just expired worthless for the full credit. So that was a good trade for me. I think it was at the 40 level, wasn't it? Something like that. Let's have a look. Where did I have HIMS? Can't find it now. Anyway, it expired worthless, so I kept all the premium of that one. The earnings for HIMS is, oh yeah, look at that, tomorrow. We'll see what happens. This one is exceedingly volatile. Even on good earnings, you can get massive drops. Look at this one. Huge jump here for this earnings. Not a massive surprise. Okay, yeah. Missed revenue. That's why the drop on that one. So we'll see what happens tomorrow. I do like the 40 level for HIMS. It is some solid support. And has been for a long time now. So we will see what happens. It's a 200 day. Yeah, it's right at the 200 day. Did break below it, which was worrying, but Friday we had kind of it was green, but it was a bit of a nothing day. Everyone's waiting for earnings, I guess. So yeah, that trade went well, expired. I kept 100% of the premium. And we'll see what happens with HIMS after earnings, whether we get back in or not. SoFi. So SoFi was another one that expired for full profit. That was a good trade. And had good earnings. I was out before earnings happily. So yep, SoFi was good. Full profit, and we will probably look to get back in on this one. We had a nice retracement. And we're still following that 20-day moving average very closely. Whenever we break it, we touch the 50 and bounce right back up. So if I could get in around the 26 level, perhaps, potentially be a place to go. Yeah, we'll see what happens. But story on that one is it expired. Worthless. Kept all of the premium. Made my full 2% on that one, which I'm very happy with. So last week I made 2 new trades. One surprised myself with, actually. GameStop. our old friend, the meme stock from a couple of years ago. Not something I ever expected I would be trading. That said, the setup last week was good. It hit all of my criteria. It is a profitable company. It does make money. So when it's not being, is manipulated the right word? When it's not being turned into a short squeeze situation, it's, look at that, crazy. It meets my criteria to trade. Profitable company, good setup. I can sell the puts below a good strong area of support. There was no earnings in the trade timeline, so that's exactly what I did. On the 28th, where are we? Back here, this second red candle, I entered at the 22 level for a 81 cent credit per contract. So yeah, way over what I'm normally looking for on a 2% for 30-day trade, purely down to the volatility, which, yeah, it's a volatile stock, but its underlying business at the moment is fine. It's making money. It's beating earnings quite regularly. Yeah, it's just been played with by some influential people online for, for some fun. So we were in, got the credit, and then of course we've had 2 red days just because I got in before then. But we're kind of hovering right now at a really strong support level. So my hope is opening on Monday we'll get a bounce. This expires on the 28th of November. So, earnings isn't until the 3rd. So hopefully we will be out long before earnings. If not, I will follow the same path as what I discussed with UPSD and MVO. I will take assignment, hope for a pop over earnings, and then offload the shares at a profit, or sell a covered call. We are wheelers after all. So that was last week's trade. 2 trades last week: Pacific Gas and Electric. Should be a nice boring utility company. Again, profitable, on a comeback from a low in July. And a good jump even with a bad earnings. See, there's no rhyme, no reason to these earnings, is there? Just coming off a good earnings. Well, we missed revenue, but we had good earnings per share, which explains the drop after a green earnings. So this one I entered on the 28th as well. So we just go back to that day. It was this big red candle here where it was just touching the moving average. Got in at the 15.5 level for 33 cents for a 30-day trade. So they're dead on my 2%. That's what I look for. Dropped another day, and then we've since bounced off the 50-day moving average here. So here's hoping for a continued rise. I'd like to get out of this one earlier if I can. Well, I'd like to get out all the trades earlier, but if we can get a nice little bounce back up again to the 17 area, I can be out pretty quick with that one. And HPE. So absolutely nothing done with that. That's still the same as it always has been. On this drop, back on the 16th of October, I did look to see if I could do the same as what I did with Soxal. So pull these covered calls up above the cost basis, or at least closer. But the premiums weren't there for HPE, which is understandable. It's nowhere near as volatile as Soxal, so the premiums are nowhere near as good. And the spreads, the further out you go on HPE, get ridiculously large. So yeah, wasn't able to do anything with HPE, and we are still following the strategy that I've outlined in my previous videos. Yeah, so that is where we are right now. Did I miss anything? Let's have a quick check. S, I am in S, aren't I still? Yes, I have missed S. So S was one of the trades I had on in my last videos still. So no change to that one. It's been bouncing around right on my strike level of 17. It's nipped below it a couple of times, jumped up, it's just teasing me. But Friday we had a lovely green bar right up. So if for the next week we can just follow that trend, the 100-day moving average seems to be the resistance that we just can't push through at the moment. And we'll see what happens in the week. If we get a drop on Monday, I may look to see if I can roll that down and out. When's earnings? 9th of December. So I've got some time. I could play with a couple of weeks. But SentinelOne is a good, solid company. I'm more than happy if I end up owning it at 17. I think it's undervalued at that level. Yeah, we'll see what happens with this. And that's where we are, fully caught up. So apologies for the break, all of my millions of viewers, but like I said, I do this for me. This is my trade journal, so I'm glad to be back doing it, analysing my own trades and looking forwards. I do have about 10% of my account unallocated at the moment, so I will be looking for new opportunities next week. Problem is we're right in the middle of earnings season, so all of the usual stocks that I like to trade all have earnings coming up in the next few weeks, so it's a bit of a dry spell for me in terms of number of trades. That's not a bad thing though. Sit on the sidelines and watch sometimes, keep a bit of powder dry. You never know what's going to happen. Okay, as always, if I make any more trades on Tuesday or Wednesday, I'll do it'll be week 44 trade update. If not, I will do another one next Sunday for a review of week 44. Okay, as always, stay healthy, stay profitable, and I'll catch you in the next video.